U.S. stock markets continued their downward spiral today, a response to President Donald Trump's sweeping tariffs announcement. The market fallout has sent millions of Americans' 401k retirement funds plummeting. It's also sparking some fears of a recession. Today here on First at 4, we welcome Gary Fisher, Chief Executive Officer at GL Fisher Capital Management. And Gary, always a pleasure. A school friend of mine, always a pleasure to see you and have you on the show. Today, I have dubbed this tariffs and 401k for dummies because we need you to speak in plain layman's terms where everyone can understand.
Gotcha.
What are people witnessing right now with their 401ks?
Yeah, what they're witnessing right now is this year's version of a market decline. The market goes down on average about every 6 years. There's always a different reason, and people always think it's different this time. But the four dumbest words in financial planning are it's different this time. It's never. There's market declines happen on a regular basis. There's always a different impetus for it, and tariffs are definitely the impetus for this one.
And so we hear a lot of advisors right now saying, some advisors saying we should invest less money into our 401ks, but we should buy gold or we should buy bonds. Many people, a third of working Americans, they have a 401k that's employer sponsored. They don't even know who to call.
Right.
How do they take advantage of something like that if they don't have a Gary L. Fisher, someone who's managing their money or a fund manager, and they're just
do-it-yourselfers?
I mean, who do you call?
Well, first of all, let me back up a little bit. The first thing you have to do is rearrange your thinking philosophically on it. And here's what I mean by that. What's happening right now is stocks are on sale. The prices are really low. If you're a buyer of something, is a low price better than a high price? For example, let's say you wanted to buy a condo in Florida, and prices are sky high on condos, the highest they've ever been. Is that the best time to go and buy a condo? Or is it when a hurricane just blew through, insurance is expensive, it's a mess? Is that the time to go in? Well, it's when prices are low, right? Imagine you're a cheeseburger eater. I'm a cheeseburger eater from way back, all the way to Angelo's Coney Island, right? So I've got a lot of experience with cheeseburgers. I'm a cheeseburger expert. Connoisseur, some would say, of cheeseburgers. Double deluxe with grilled onions at Angelo's. I could write a book about it, and I probably should. So if you're a cheeseburger eater, do you want beef prices to be lower or higher if you know you're going to be eating a lot of cheeseburgers in the future? It's the same concept with stock prices, or equity prices, I guess I should say. Because at the end of the day, right now, prices of equities, or what you're investing in your 401k, are a lot cheaper today than they were yesterday, and they were cheaper yesterday than the day before. If you're buying those, in other words, you're investing regularly. The technical term is dollar cost averaging. It just means you're putting money in regularly, every couple of weeks or every month, right?
As you would with your employer-sponsored 401k.
As you would with an employer-sponsored 401k. So what you're doing is you got to switch your brain around and think, well, I'm buying these on sale. And for the person that's going, oh, he's crazy buying them on sale, what are you talking about? That's exactly what's happening. The only person that shouldn't buy into that is a person that thinks the market's never coming back. It's the end of the world this time, just like it was during COVID, or it was during the dot-com bubble, or it was during the mortgage meltdown. The Dow's been down many, many, many times. In fact, it's been down more than 10%, 16 times in the last 100 years, 12 if you knock out the Great Depression. And excepting just a few times, I want to say it was 4 times, the market came back the next year with a very big reward for those people that stayed in the market and stayed patient. The people that should be concerned are people on the brink of retirement or in retirement. That's a very different animal.
Here she is.
Yes, very different. I want to make that clear. The person that's got more of a time horizon, they should be looking at this and thinking, man, I'm getting I'm getting equities on sale. Because what we know is history tells us, I've just told you 100 years of it, it's probably coming back, and it's probably coming back even better than before. If you look at, you remember 2008, the mortgage meltdown?
I do.
December of 2008, and I might be a little off on my numbers here, the S&P 500, the Standard & Poor's 500, big company stocks, the number that it was at was 754, I think. It's even today, with the drop today, it's over 5,000. So it went up 7 times. But you know how many people got out in 2008? Oh, it's the end of the world. Look what's just happened. I should be I should be out of it. I should have it in my backyard in a coffee can or something. They missed out on a 7-time increase in their assets. And that was the Great Recession, right? That was second only to the Great Depression. And that was based on some endemic, specific things happening inside our economy.
My producer's
Very
rapping,
different.
so I want you
hit me.
to very quickly.
Sure.
Close to retirement, folks that got many years. So if we're close to retirement, what should those folks do? And folks who are maybe just starting their careers, starting with their 401k, should they just ride it out and just wait for things to pick up?
Pretty much what I was just referencing is if you're in it for the long haul, you got a long time before you're gonna retire, 10, 15 years or more, You're buying equities on sale, and you're going to need them because prices are going to go up as you get older. 55 years old, 60 years old, on the doorstep of retirement. I'm going to be really candid, Dawn. You need help. You need help. You need a person you trust that can help you put a plan together to help you ensure that you don't live longer than your money. There's very few things worse than living longer than your money. And unless you're willing to crack the books and really dive into it, and I don't know too many people that want to spend their weekends doing that, find somebody that you trust and have them help you craft a plan, because you don't get a second shot at that goal when you're 55 and up.
Yeah. Oh, so much more we didn't get a chance to get to. We'll have to have you come back, Gary. Always a pleasure.
I'm at your beck and call, Don.
I
You just let me know
appreciate
when you want me back, and I'm happy to do it.
Gary Fisher from GL Fisher Investment Capital. Thank you so much.
My pleasure, Don.